Hello everyone, my name is Moji. You're watching a Bitcoin bubble news channel. They put themselves in a position where they could say what was a security and what wasn't. I thought there was a good reason why Bitcoin and Ethereum were dealt with as commodities instead of stocks. That's because when you call something a commodity, you can trade futures contracts on it. These contracts, as Leo Mellane from the CME explained, let you control the price. As of right now, the reason Bitcoin hasn't responded the way people thought it would after halving is that big players are shorting futures and buying the actual ETF. This is called mass arbitrage. That means that most of the money coming into those ETFs isn't really from people buying them. They're just trading to get the difference in price between the future and the spot. Hello, crypto family. That was Mark Yusko telling you how the Bitcoin ETFs are being hacked, which is why Bitcoin's price may be going down right now. In this video, he talks about some new ideas he has had about Bitcoin, where he thinks it will go next, and the future of crypto. I really think you should watch this episode all the way through. Please click the subscribe button. Every day we post new movies. Like Bitcoin, Ethereum, or even Ethereum. I don't like Ethereum as money very much when it comes to cryptocurrencies. I like Dash, Monero, and other similar coins, but they are still computers that work all over the world. It's a non-fungible token, or NFT. It's not a monkey JPEG after all, right? Which is what everyone thinks of, but I don't even like the word non-fungible token, even though it's right. One of a kind means non-fungible. A token is a record in a book. It's not a coin or anything. That's all it is in record on a ledger. A blockchain is just a chain of entries on a ledger. But blockchains are different because they are permanent and can't be changed. It's not like a COBOL database that all of us use every day with our Visa or MasterCard. They can turn it off if they want to. They could also keep all of our info if we want to store it in the cloud. Or we put our money in the bank. It's written down on a book, but it's the bank's money, right? That means it's no longer our money. That's what blockchains fix. They let us have things. It was read on Web 1, and it is read, written, and put on Web 2. You can read, write, and own things on Web 3. We can own things with blockchains. I believe that this kind of non-fungible coin should really be known as a digital property right. An entry in a journal is just proof that someone owns a piece of property. It could be a JPEG, a title, a stock certificate, a bond, or any other object. It could even be the Mona Lisa, not the real one, but the right to own it. But that's what blockchains are good for in the end. And Eric Schmidt from Google really put it best. Not only did Satoshi Nakamoto create Bitcoin, but he also made it possible for people to make their own digital assets. What does that even mean? Take a look at it. You know about stocks, right? In the past, you and I would meet in New York at the Buttonwood Tree, which is the big tree that is now the stock exchange. We would meet in person and trade traditional items like stock certificates and bills. We had to be close to each other in order to do this. For real, those guys in top hats would steal our stuff. If you've seen gangs in New York on the way to the Buttonwood Tree, that's who they were. To keep you safe, the stock exchange built a building and told you to go inside, but you still had to get there. They had a thought to say, you know what, when computers and the electronic age came along, leave the bills in the bank and turn them into an electronic collection of ones and zeros. Your stock certificates should be in Dallas, Texas in DTCC. They should also have these QCPs, which are alphabetic codes that you can change. In the past, people would go to the floor and trade with each other. Computers now change the price. There are no people there. Not no people, but almost no people. Okay, that's fine. However, those stock papers must still be in Dallas, Texas. So why? Why not make one-of-a-kind digital goods that are entries in a blockchain ledger? That's the end of the wood age. We went from the analog age to the electronic age to the digital age. Everything in the world, including every stock, bond, currency, good, work of art, collectible car, bottle of wine, private business, and $700 trillion worth of assets, will eventually have a place on a blockchain. Everyone will use blockchains to do their work, and people will buy and sell things in the digital world instead of the electric world. Many utility tokens, on the other hand, are not really decentralized, which is their main flaw. Okay, they lead to computers in AWS or Azure. On-chain means on-chain to me. If I want to own something on-chain, it has to be on the chain itself. I think the best way to do that is to show proof of work. In the end, I think Bitcoin has a big advantage. It's like Lord of the Rings, one chain rules them all. Does that mean virtual machines aren't useful now? Not at all. That means I believe proof of stake and proof of past are not strong enough. Yes. Does that mean they have too much power in one place? Of course. How can that be fixed? More work on growth? more nodes and less centralization. But in the short term, yes, they are comparatively too controlled. Yes, so here's what's wrong with trying to time the fall of the yen. It's been 15 years since Kyle Bass tried to do it. Some people who lived before him also said, hey, when you get to 100% debt to GB, you have to fall apart. It could be 150 though. It could be 180. It could be 220 though. The truth is that it's because of the yen carry trade. What is the yen carry trade anyway? With no interest rates, people from all over the world can borrow money for free and buy anything with a return. This is called a carry trade. So the yen was the axe in the global carry trade for years. It was very interesting because other countries could have dropped their rates to zero, which they did in the end. In the end, this was made much stronger. It's not possible, right? Everything in this country is falling apart except the way of life. It is really, really nice to live there, especially if you already live in Tokyo. It's a great place to live with great food and great homes. In short, the long tail happened when the Federal Reserve went back to punishing people by raising rates, or, more accurately, unpunishing savers. This is because going to zero rates punish savers and steal their money to give it to the rich because they borrow everything. Once they changed their minds, the end carry trade came back and has been the preferred deal ever since. So the difference is that you're right, a country with 226% of its GDP in debt should, in theory, fall apart. When the yen goes through the roof, it should be a terrible event. So, to fund this global carry trade, which is also supported, there is an almost endless need for yen. This is because fiat countries keep printing more money. Take a look at the race to the bottom. We're going to quote DXY, right? Wow, the dollar is really strong right now. It's not, though. It's not as bad as the yen or the euro, though. From the point of view of the scope and B, it's not very strong. Because of the way people live, this world race to the bottom is unavoidable. Foresight is based on numbers. People aged 65 to 85 don't spend a lot of money. They save money and like having a steady income. So what we saw was Japan first, then Europe, then the US. For the next 7 years or more, 10,000 people in the US and Europe will turn 65 every single day, and things will keep going that way. Take a look at Japan 11 years ago to see what will happen in the US and Europe. So, their debt got worse in 1989, and ours did the same in 2000. Their debt got worse 11 years later, and so does ours. The same things keep happening. Last but not least, I believe the yen is a planned demolition.